Well, speaking of Disney, its earnings out after the close yesterday exceeding expectations, along with the CEO Bob Iger announcing some big things. So joining me now to unpack these results is the CEO of Sound Planning Group and founder of SPG Advisors, David Stryzewski. Did I get that right? Is it Stryzewski, David?
David Stryzewski, but
yes.
yeah, no problem.
Stryzewski, that's how I thought it was. So thank you for joining. So let's talk about these results and what you take away from Disney's results.
Well, you know, as we look at this is sort of a make or break quarter for Disney. I mean, Bob Iger's back. We've had, you know, challenges at the board level. We've had, you know, a number of activist matters that have come up here, and you know, so this was sort of a throw everything in the kitchen sink at it. And I mean, it looks like Disney had a pretty strong showing. So I think overall positive here is my initial reaction to this. And I think it actually exceeded expectations in several areas.
What does this mean for investors? How big of a component is Disney in these major indexes? Certainly, if you own media stocks or Disney outright, I think our viewers could infer that would impact their portfolio. Any sort of immediate impact on the major indexes?
I mean, when you see an increase of 6% like this, yes, it is a meaningful gain. But as you look at the S&P 500, Disney, you know, commands such a small fraction of that cap-weighted market that just puts so much emphasis on the really big guys. You know, they're only a $180 billion company where Microsoft's $3 trillion. But you know, it definitely moves things in a positive direction. And I think that a lot of people, you know, will begin to even look at Disney again, maybe as an individual name to be allocating into.
Yeah, we should note here, major indexes right near a record high. I'm giving it a look at Disney. Not quite at a new 52-week high for Disney shares, but again, today's pop does help, as you mentioned. How does guidance factor into this?
Well, you know, guidance is interesting. So they're looking at, you know, the fourth quarter here, that they might even become profitable again. Well, that's a really big deal, given the fact that in 2022 they lost $4 billion and they lost $2.5 billion here this last year. So, you know, getting to a profitable place would be awesome. I think that, you know, the big, you know, cost cutting was really where we saw some improvement in this. I don't know if that had something to do, though, with some of the strikes that were taking place. So we'll see if you know, less production expense was in there. But I think that this could be a favorable trend here looking forward into the new year. Because, I mean, how many places are you seeing 20% EPS growth right now in old legacy media? Pretty rare.
It is pretty rare. You're right. The company also announcing on top of growth like that, David, a cash dividend of 45 cents a share, increase of 50%. What does that mean for investors?
Well, you know, one of the things that is really important right now is looking at free cash flow. And so Disney's basically saying, hey, we're going to reward you. And so I was surprised to see that 50% increase on the dividend. So that's obviously going to attract, you know, some players that are looking for income at this phase in life. We've got 14,000 baby boomers retiring this year. So there's a lot of folks that are looking for dividends. The thing that was actually surprising to me was that they were noting $3 billion of stock buybacks. I thought that was probably, you know, 2 years out maybe, but they're certainly looking at doing that here this year, and I think that's definitely going to be weighing on investors as they're looking at different opportunities and options today, especially with the breadth of areas that Disney's trying to get into.
You know, another factor here amid these big announcements is Disney investing $1.5 billion into Epic Games. A pretty big move by that company. What do you think a tie-up like that could mean?
Okay, so I like this for Disney, given the fact that young people are coming to the parks and they're playing a lot of video games. Fortnite, you know, is a very popular game. It was probably more popular a few years back, but still a very popular game today. I know I got a couple kids that play, and so I think this makes them relevant. It keeps them, you know, in the consumer's mind eye, and I think that gives them the ability to expand, especially with, you know, their emphasis more into ESPN and some of those streaming services there. So, you know, I think that you'll also get some extra revenue if they can sell skins or, you know, different outfits that people can be wearing. So, you know, we'll end up seeing. They've not done great in video games in the past, but this is a direct investment, not just a licensing deal. So I think that there's probably a strong move there.
Are you a Taylor Swift fan, David?
I think she's got some really catchy music. Everyone knows it. It's pretty hard to bet against her right now.
It is hard to bet against her. That's exactly right. I feel like karma is the soundtrack of this past 12 months, certainly for Taylor Swift. And T Swift entering our conversation here because her Eras tour coming to Disney Plus, as sequel to Moana hitting theaters later this year. This does seem to be strategically planned in terms of the timing, just the moment that Taylor Swift is having earnings here as well. Can this bring in new streamers for Bob Iger?
No question this is going to bring in new streamers. This is an exclusive deal with Taylor Swift. Everyone wanted to go to those concerts this summer. She raised billions of dollars. I mean, it's just an incredible feat to see what she's done with her career. But yeah, so if you can only get access to this on Disney Plus, well, then maybe that's going to bring in some of those new subscribers, which is really what Disney needs to be figuring out. Cost cutting will only get you so far. You got to get the new subscribers, top of line revenue here in order to continue to progress in the direction they're wanting to go. So yeah, it's good.
I almost think Spotify has some competition with this move as well, even though it's not a direct one-for-one comparison with Disney per se. It's been a lot of fun to watch that concert. It's still only available to rent. So I think some of those streaming bills have racked up for people. ESPN, another key factor here, David. There's so much to talk about, so many different layers to Disney. What about the strategy when it comes to ESPN?
Okay, so here's something that we just have to recognize as a trend. About 30 million Americans have cut the cord, if you will, with cable. That's expected to be tens of millions more here as the years go forward, especially given, maybe some of the inflation challenges and we start, looking at expenses here. I think this is very smart for Disney because as they look at ESPN, they're getting in now, older males that don't necessarily associate with the Disney Channel, but maybe, hey, if we bundle everything together, we can kind of get a little of each and everyone can appreciate it. So they've done a collaborative deal here with the ESPN. They're going to have their own version of that. Here's one thing that's really valuable. Usually these media producers, they can focus on production, like what can they create, and then they get it out. When you actually own the platform, well, now you can actually scale the things that are getting out there. Much more important as far as the the economics and being able to bring new ideas to market. And so to be able to own these platforms and build these out is going to be really great. And obviously sports is popular pretty much anywhere you go.
What about linear? I'm just curious, David, if you've considered linear. ABC News, I mean, it wasn't too long ago that we had heard Bob Iger, the CEO of Disney, say that linear wasn't necessarily core to the business per se, right? That like an ABC News, for instance, might be up for sale. I don't think that's the case necessarily now that we know of, but that was getting floated maybe 6 months ago.
There's a lot of things that have been floated here relative to Disney, what they're going to do, how they're going to do it. I mean, so Disney's, candidly, they lost a little bit of credibility with parents because of some of the productions that came out here over the last few years. I'm one of them. And so the big thing is, how do they earn that back? How do they say, hey, you know what? We have been this organization you've trusted to tell stories and do all this wonderful stuff. I think that their future is bright. I think that they've got a lot of opportunity here as they're scaling. And as they diversify outside of just parks or just movies, and they get into some of these other verticals here, I think that it's going to go pretty well for them, especially if they can, really get some of those families hooked in with just a couple of things, like the one or two or three things that they would really go to those services for. Yeah. So don't really have a comment on everything they're going to do, but there's quite a bit that they're trying to accomplish.
What, as a parent, David, what was it that caused you to maybe fall out of favor with Disney with some of their content in recent years?
Just a lot of the kids' movies these days. It seems like there's been a lot more agenda that's been kind of pushed, and it's just really become politicized and sexualized. And I've got very young children, 5 kids in total, and so you just want to be intelligent about what they're looking at, what they're consuming. But my kids had come to me and they were like, "Daddy, oh my goodness, take a look at this." And so I think that's a big part of why the Disney Plus, even saw more subscribers lost in this report. So as positive as a report that this was, they still actually lost more subscribers on that Disney Plus than they had expected. And so that's really sort of the sinking, the hole in the sinking ship here is how are they going to be able to get that trust back with the families and ultimately, begin to right that ship. But Bob Iger seems to be on track. He was the guy that did it before, so I'm assuming he is going to be able to do it again.
All right, David, thank you so much for joining. A lot to break down with Disney. We appreciate it.